Anchored here on TradeGATEHub.com. We're powered, sponsored by TradeView Markets. Open a demo, check out their competitive spreads and the ability to trade everything on MT4 and MT5. Last Monday was my last stream I did with strictly my forecasting. I talked about how I liked the crude at a 3 drive to a bottom. This was last Monday right here. We were trading about 70 and a half, 71. So we've had a nice rally in crude. I took profits on the third day up that was here. And there's no reason to, look at this not being a bottom yet, but we still have to prove ourselves by closing back over this channel line, which is coming in around 78. So today's action is pretty positive in crude, especially since we do have S&Ps fading. They had a very big risk off week. So anything that performed with what happened to risk last week, you have to respect. And that means the potential for a continuation move in the WTI. Also, the other call was I felt that, well, not felt, had some technical reasons that the euro would top. I was looking at 107.80 as a potential high. We didn't quite get there. We got up to 107.36, but it put in a big reversal day. This was on the ECB and the BOE on the same day, and the most significant part of that was what happened to euro pound on that day. So the BOE came in dovish, ECB sounding much more hawkish about what they're going to do. There were a couple of doves on the BOE that voted for no rate increase. That's not what's happening at the ECB. So I think this is a significant move, both fundamentally and technically in euro pound. Really had quite an impulsive day. You have to buy dips if offered. In fact, you just buy it anywhere because I think there's some pretty good upside. But if you want to finesse it, maybe 86.60, 86.40 in there, maybe a 50.60 pip pullback. But the potential of this trade could take it well over this 88 level, and we could be looking at a 90 euro pound to eat its way into the wick from when we had the crash in the gilt market on this day. So looking for retracements into that, which leaves me with EG looking good. Your preferred short is cable. Talked about one more high in cable, which we got. Cable looking much weaker. EG says it, but let's just look at the two charts. I'll be your eye doctor. Which looks weaker, this or this? This or this? So of course, yeah, the pound, all it could do is flag. Maybe it could recover sometime this week. I have targets down to about the 117.70 level, 118 level. You could just measure it as maybe this will end up being a right shoulder. We break down under 21 and you subtract 340. That's going to give you 1760 or so for a target. Also talked about, I was looking for one more low in the Dixie, which is what we had this day. Turned out to be a nice little 3 driver in here. Dollar's trying to break out above it. And I believe there's potential for the dollar to rally initially towards this 105.50 is going to be resistance, but ultimately I think we could make a move towards 107, 108 that could give the euro, 102 possible target down here for 3.5, and then maybe 102. Japanese yen is in a bear market rally that I think could surprise some people and take it all the way up into the 140 handle level, between 142 and the breakdown at 145. And then gold, we had that break in gold on a 3 drive pattern. I think that with the dollar, if it moves to those targets I talked about in cable and Dixie, that we could get a break back down towards 1730 or so in the gold market. We'll see, because it is possible, and a lot of people aren't talking about it, Everyone's saying, yeah, we'll get a weak rally to 108 and then we're going to break to new lows again. It's also possible we get a rally to 108, pull back towards 106, and then give us one real good thrust into early January, mid-January up here around the 112 level. And people will be talking about new highs once we get there. But this part of the move, I think, is a high probability call. Want to get to S&Ps. I talked about a bear raid. We certainly had a bear raid last week. You see by the candles. The most important part of the action, and I was willing to give this market a chance to trade up to 42 or so, but that high was made on the very surprising positive CPI benign number reading we got. And this line that it broke out of is the downtrend line that everyone was looking at. So it took it out intraday and then didn't even close above it. So this was the candle right here. So to me, that's a false breakout. Then we had the Fed, and the Fed came out with their half. Powell sounded hawkish. Maybe you could find something. The market was hoping to find something positive. And intraday, when they tried to bring the S&Ps back, all we got back to was underneath this trend line. And then Thursday and Friday kind of sealed the deal to the downside. So I've been talking about a bear raid and that we could go to 36.58, but you have to keep in mind that, maybe we got a Santa Claus rally, but the way the S&Ps look, if we did get that year-end rally or Santa Claus rally, I think that it's going to have a hard time penetrating 39.5. That was a big pivot. So rallies back to 39.5, I think, should be sold. And as I look at the S&Ps, I think that there's a chance into early next week, since I'm a 3-drive guy, we have 2 touches on the S&P weekly. And then we have one more down here that would complete the formation down here, a shade under 3,400, which was the high prior to COVID. So there is some damage. There was damage done in some of the markets in Apple. We had that breakdown under the 140 level, and now we're trying to hold prior lows. I think that there's a bigger downside left in this market. The bank shares have been acting pretty lousy as well. So there's a lot of weakness underlying. In fact, some of the strength that, some of the leadership even is beginning to cave. And here I'm talking about John Deere. Look at the type of performance it's had, and it's eating its way into the gap. But I'm saying that we could be starting to develop a pretty important high here in Deere, which you would think with agriculture it wouldn't be that way, but keep an eye on this. When I look at the monthly, Deere looks like a great short setting up for a 3rd drive up here. Look at the glaring divergence at new all-time highs on the monthly in Deere compared to what we had in 2021, and even this high in 22 was over 70, but this high on this recovery that we've had this year has really left a glaring divergence. Be careful with some of the darlings that have worked, because if we have a washout to 3,400, it won't matter if you're in a good stock. They'll take them all out. VIX still trying to put in some type of low, still acting, like there's no fear, less complacent than before. And I think if I'm right, that we could get one pretty good spike in the VIX. I'm going to see if we have any kind of Santa Claus rally, and I'd be looking to buy the VIX maybe back under 21 if we had some type of holiday rally. But the picture to me looks like going into next year is a recovery in the dollar. While that's happening, you could have pullbacks in other markets like gold. Cable's going to lead this dollar correction. Yields could pop a little bit. In fact, they are today. If you look at the 10-year, we're up almost 8 bips now. So even though the CPI delayed the count for a move to 375, 380, that still looks viable to me. And we'll see what crude is made out of. A lot of people are going to call this a bear market rally all the way up to 80. So, but if you're a guerrilla warrior and you're a trader, you don't have to be right for a $50 move in crude to do well in the market. So some 3 drives that pointed us in the right direction. This was one of them, right? 1, 2, 3. The dollar was another one. 1, 2, 3. And the gold was another one off the daily. 1, 2, 3. So these are my go-to formations for looking for turning points. So it's Christmas. It's a time of giving. I'm giving you this tool to begin to study and implement it into your work. I'm also inviting you to join us in TradeGATEHub.com and to be a client of TradeView Markets and trade at tighter spreads than you currently are. So that's a wrap. Good hunting, everybody. I'll be back here with Mike tomorrow. Mike should be here in about an hour and a half. And I do have a guest interview on Thursday. Andy Constant at Damp Spring. Guy has a waiting list to get on his private Twitter feed. So let's make hay while the sun shines, and good hunting, everyone. Hope we're adding value to what you're trying to accomplish as a trader.